Good morning and welcome to Stock Market Math. My name is Paul, and today we're going to spend the next 3 minutes looking at what you need to know before the markets open on Monday, April 29th. Sit back, get yourself a cup of coffee, throw some bacon in the frying pan while we rewind the clock to see how things ended on Friday. Starting off with the Dow Jones Industrial Average, we can see that Friday was a good day, up 154 points, bringing the week up to 214 total. Flipping over to the S&P 500, Friday brought us up 51.5 points, bringing the 5-day total up to 117.5 point total return. But the big news was in the NASDAQ. The NASDAQ jumped up 316 or 2% on Friday alone, bringing the 5-day total up to 550 points or a 3.58% return on the week. Now, if we look at the graph, we can see there was some bad economic news that came out on Wednesday that drove down the market. However, strong earnings calls from Microsoft and Google, including Google announcing a 20-cent dividend per share to start in a couple of months, drove up the market, giving us a very strong close on Friday. This week, we have 168 of the S&P 500 companies reporting earnings. There will be 6 companies reporting on Monday, including NXP Semiconductors. 50 companies will be reporting on Tuesday, including Amazon, Eli Lilly, Coca-Cola, American Tower, and McDonald's. Wednesday brings us 53 earnings calls, including MasterCard, Vici Properties, Pfizer, Qualcomm, and Yum Brand. Thursday earning calls include 59 companies such as Linde, Apple, Southern Company, Booking Holdings, and Consolidated Edison. Friday, the markets will be open, but there'll be no earnings calls. This week in U.S. economic reports and federal speeches, we have nothing on Monday. On Tuesday and Wednesday, we have the Federal Reserve meeting to discuss any changes to the prime rate. This will end on Wednesday with Chairman Powell's speech at 2:30 p.m. Thursday, we have initial jobless claims for April. And Friday, we have the U.S. employment report and the U.S. unemployment rate for April. Taking a look at the fear versus greed index, we can see that we have a 42, which puts us into the fear sector. Last week, we had a score of 32, which was much closer to the extreme fear sector, so we seem to be moving slightly back towards neutral. Taking a look at the long-term timeline, we can see that we follow a cycle of going greed, extreme greed, dropping down to fear and extreme fear, then followed back with greed and extreme greed. Will this cycle continue? Who knows? Remember, like and subscribe for more, and keep investing.